Right. Good morning, everyone. Good morning. Let's get to talking about whew, let's get to talking about the situation in the market. All right. So big drop in the market. One that I'm personally not benefiting from at all. I'm not benefiting from this move at all. Not at all. Okay. So I'm gonna talk about certain levels, and then I'll also talk about maybe some plays that I'm interested in getting in. I'm not all that interested so much right now. I'm not really chasing anything to the downside. Honestly, I'm not benefiting from the move. I'm just not. So I'm gonna share with you guys a couple positions that I bought into, and I'm going to talk about a little bit of what I'm thinking just going forward. So yeah, I did buy some shares recently, and it ain't looking too good. All right, I don't know about you guys, but yeah. Well, let's see some levels here on SPY. Let's see where we are in terms of overall market structure, and let's see exactly how low we can go, right? Let's talk about that. So let me clean this up, and let's look at SPY on the daily time frame. Okay. And we should include aftermarket data. Let me use TV real quick. Okay, so this is where we're at, guys. It actually hurts me to say this, but we're we're at a support level at $545. So how low can we actually go? Like reasonably. Reasonably low. If I'm thinking just technical analysis here and I'm using the daily time frame, I think the low puts us at about 530. I don't know if you guys are going to agree with this on me. Obviously, I don't know exactly how low that can go. I'm not gonna be the person that says this is the bottom, right? I'm definitely not gonna be that person. But right now, I'm looking at a possible 530 where this volume node is. So the reason why I have that is because right here, it doesn't look like we have any buyers or any sellers. All of that support brings you from 520 to about 530, approximately that. I see the bond market is actually up, not by a considerable amount. I know that gold sold off just a tiny little bit there off the top, right? That is a significant development, right? Gold selling off, oil sold off as well. I know most of you are not that interested in oil, but it's selling off about 6% is quite significant. Let's go back here to SPY. So SPY is down from peak to trough. Let's see on the 15-minute time frame. Let's do a calculation. From the top of that candle all the way back down here, we had a 5% move. So pretty big move there to the downside. Pretty big move. Obviously, I'm not that enthusiastic today. Today is not a day where I'm too happy because I did buy into shares. I bought into QQQ, and right now I'm going to be down almost 10%. So yeah, I'm not happy. I'm definitely not happy. Okay, so let's check out the 1 hour time frame. Are we breaking structure here lower? We are. We definitely are. But I want you guys just to pay attention to the overall demand levels that you might see in a little bit. So now that we've created a break of structure, right? It's literally a break of structure. How much lower can we go on a percentage basis? Maybe about another 4%. I think 4% is a reasonable guess. I think it's literally a guess at this point. So what would I be waiting for right now? I'm going to give you some tips. If you're in the Discord, then you know what it is I'm looking for, but I'm going to share with you guys. I'm generally looking for one of two things. The moving averages, the 5 and the 21. So I'm looking for that off of the 4 hour time frame, which right now they crisscross like crazy, right? That 5-day moving average literally undercut the 21 like never before. That is an extreme undercut right here. I think the last time we saw that was right when we were at the top. So it's an extreme underpinning. I do want to actually bring some attention to this on your VIX, on your 1 hour time frame there for the VIX. You're trading right now at 26. So we were higher on the VIX back in March, right? We were higher on it. We were trading at about almost 30, right? I think that this is kind of significant. So you're at the 26 threshold. So you had about a 20% move there on a 6% drop on the Qs. Is that relevant? I think it kind of is. I think that the market overall was not happy at all, obviously. But I would think that the VIX would be higher. So I'm generally looking to short the VIX as soon as we get above 30. So we were almost at that threshold. I have that, it's a trading strategy of mine. When we get above here or we get above here, I generally short it. Okay, so we're not quite there yet. We're at a midpoint. We're at about 25, 26. If I'm looking at the broker, we're at about 26. Okay, so now let's go to the Qs. Let's see how low we can go on the Qs. I think this is in more trouble than SPY, honestly. So you had a bear flag that played out here. You had a shorter term bear flag that played out right here. You can't really see it on the daily, but it is right here. So what are some levels that we can look to possibly find some support? Possibly. I think about 450 is reasonable. So another $7 move there to the downside. So between 440 to 450, I think what we're talking about here is stop accelerating to the downside. So how much of a move lower would that constitute, right? We might get a strong candle or a strong wick to the upside today. We got it yesterday, right? There was obviously buyers in this pool. There was obviously buyers between 460 to 465. It was very apparent. It really, really was very apparent. Now, did we have people that were looking to buy the dip like myself? Yeah, you definitely did. I had the impression that around 462 is where we were going to start seeing some support. I was very wrong. So how many percentage points can we look to possibly see lower? I'm thinking about another 3% on QQQ. I think that is a reasonable target. Anything lower than that, then you're looking at this demand level right here. You have to look back at that. So how much lower can you go, technically speaking, on QQQ before market starts to buy it up? Well, you have a threshold here at about 3%. And then the lower threshold than that, in my opinion, right, is about another 5 to 7% lower. So that's what I think. Between 3 to 7% lower is a possibility. I think it is definitely a possibility. When I was looking at order flow yesterday, I didn't really see a lot of orders that were necessarily shorting the market. I didn't see a lot of it. I didn't see a lot of puts, not on Qs. I didn't see it, right? I'm looking at this, right? I'm sorry that if you guys can't see this on Instagram, you might be able to see this on YouTube. So I didn't really see a lot of short orders on RH, right? RH is down almost 30%. I'm not seeing Qs. It's not here. It's definitely not here, right? There's no unusual flow. And there's not really that much unusual flow on SPY either. So I'm seeing, pretty normal activity in the option market. I might see a little bit more, activity after hours today or during the day. As soon as the market opens, we'll see. But I don't have a lot going on. I really don't. Let's check out the dark pool data yesterday. I already know what the numbers are, but I'm not really seeing a whole bunch of activity. Really, anticipating the drop. Actually, counterintuitive to that, I saw a lot of activity going long the market. I know that sounds strange, but yeah, that's what it was. Let me prove that to you guys. Let's go to dark pool activity on a singular basis. I'm definitely annoyed. Of course I'm annoyed. I'm sure all of you are annoyed as well. I bought into these positions. I bought into 3 of them. I bought into Google, I bought into IWM, and I bought into QQQ. Those are the positions that I bought into. And my worst position on TNA is going to be down 10% today, about 10% in one day. So obviously I'm pissed off about it. I'm not even remotely happy about it. All right, so as that loads, I'm going to go into IWM and see where we are on that. These are really the only things that I care about right now. I'm not really so much worried about individual stocks. I am very interested in Google. I've been saying that you should buy Google despite the fact that it's trending lower. I think that Google, don't get in at my price. I got in a little bit higher. I'm down about 6% on my Google position. So you can wait. You can definitely wait on Google. You can get a better price than me. But I will look to add to my Google position. I'm telling you right now, Google and Amazon, I've been saying it for a while. I will be buying more. No, there's no question that I'm going to be buying more. So even though I'm not in a good mood today because my positions are down, doesn't necessarily mean that right now I'm going to be all emotional. No. Right? I've been through my fair share of bear markets. And this is a bear market. I've called out the bear market 2 weeks ago. It's a bear market. So those of you that have your portfolio that are slumping down a little bit, don't be panic selling. If you are buying good quality stocks, what are good quality stocks? Meta is a good quality stock. Amazon is a good quality stock. The ETFs are a good quality. For those of you that are saying, "Oh my God, I'm going to sell everything," be careful with that. Be very, very careful. It might seem like that is the right decision to make, but how many times have you said, "Man, if I haven't sold, if I just waited a little bit, I should have been buying more at that point," right? This isn't the point to buy. We're not in a buying environment at all, right? We all know this. This is very clear. But let's keep the notion of, let's look at these good quality companies. I mean, they're all over the place. Good quality company that's now on discount is Apple. Apple is breaking into this 200 threshold, right? So I'm looking to buy Apple if we trade back down to 190 to 197. That's not bad advice. That's not bad advice at all. I'm not in Apple. I'm in Google, I'm in IWM, and I'm in QQQ. Those are my 3 largest holdings right now. Literally my largest holdings. I'm going to be down about 10% on collectively on those positions. 10%. So looking back on IWM, how low can we go here? Now I'm thinking about me, right? I'm thinking maybe about 180. I think 180 is a reasonable target. We're probably going to hit 190 here, maybe today. So 180 would be my target or my threshold lower. Okay, so what would that mean in terms of a percentage? I would say from where we are, approximately another 3.5% lower. Am I saying to buy at that point and call the bottom? No, I'm not saying that. I think that people that do that, I mean, how do you know where the bottom is? You have no idea. Is it going to get worse before it gets better? That's usually the case. So with our price action and our current predicament, was there a huge body wick? There's more wicks here to the downside and more volume to the downside aside from the wick that we got, right? We had a 6% move on QQQ from peak to trough after hours in 15 minutes. Actually, more than 15 minutes, about an hour. About an hour was that entire move. But check out the volume, right? It's a lot of volume. There's no question that there's a lot of volume, but there has been situations where we have more selling pressure overall. So just be careful. Be careful with, I'm still going to say this, be careful with egregiously shorting or blindly shorting. Maybe you just want to wait a little bit. So let's go back to Qs. Not Qs, IWM. I think IWM is worth buying into. Not now, not today. Not today. I would recommend that you wait for, and I'm going to tell all my guys and girls this too, off the 4-hour time frame, I'm going to wait once again. I'm going to wait for the 5 to overcome the 21-day moving average. I think that that's a good, healthy balance before you deciding, hey, I want to buy this in. I think the 4-hour time frame and the 5 and the 21 give you a healthy measurement of where you can start seeing selling pressure starting to diminish, okay? Because the 5 and the 21, it gives you enough time where it's telling you, okay, all these moving averages and these people for the shorter time frame. I'm not so worried about the 200-day moving average. I already know that I'm below it, so there's no point to looking at that. But on the 4-hour time frame, the 5 and the 21, when that starts to cross again here to the upside, we had that here. We relieved the selling pressure. Obviously, it came back on, right? It definitely came back on just a couple days later, but we did relieve the selling pressure. So that is the sign that I'm going to wait for right now on IWM. It's going to be on my alerts for me to start looking into positions and maybe having more of a bullish opinion, because right now I don't have a very bullish opinion. So let's go to Apple. I think Apple would be a very responsible recommendation for me, guys, for me to give you guys. I think it's incredibly responsible to say, Apple don't look too tight, right? POTUS was not very kind to Apple. It's down 7% after hours, or 7.5%. More than likely, you'll see Apple trade back down into the $200 territory. Instead of looking at the stock price, right? This is what I've generally done for my entire career. Sometimes the stock price does not reflect 100% the value of the company. That's why I'm so bullish on Google. If you look at the valuations on Google, never mind April 9th, because April 9th they're going to have a conference for generative AI, so I'm interested in that. But instead of looking at the stock price and every little incremental change, be careful with that. For you guys that are looking to buy the dips, so to speak, pay attention to fundamentals. Which companies have the best balance sheet and which companies are trading at closer to intrinsic value? You're not going to get exactly intrinsic value. That's not going to happen, right? But you're going to get pretty close to a reasonable PE ratio. So does that mean that I'm going to be buying Tesla? No, Tesla is not at a reasonable PE ratio. It never has been. It hasn't been since when I first learned about Tesla was 2013. Even at that point, it didn't have a reasonable balance sheet. But Apple does have a reasonable balance sheet, and so does Google, and so does Amazon. So it's not crazy. It's really not crazy for me to say, hey, keep your eye on these things, because as soon as you start seeing the 4 and the 21, maybe again, right? Because the lower you go on stocks, the less risky they are. It's just true. It just really is true. So this is the Google trade, right? I took Google right here thinking that we were going to hold this bottom. I was wrong. I'm definitely wrong. But I'm not going to be selling my shares because that's going to be panic selling. I'm not a panic seller. I don't panic sell anything. So how much lower can I trade on Google for you guys to get a better entry than myself? Probably about another 10% lower. So I would feasibly say that if we do get 10% lower on Google, more than likely you'll see me buy more of the position. I don't know how low it goes. I have absolutely no clue. I just know that using those moving averages as my barometer, I'm interested. Cool. I'm interested. All right, let's check out I am not in Amazon. I actually got out of my Amazon position. I got out at break even. So how low can we foreseeably go on Amazon? Amazon has a little bit of a pickup right here on short interest. There's just a little bit, tiny little bit more than what it is on Google. In my opinion, Amazon is going to be a little bit of a bargain, not too much of a bargain, because they are already fairly priced. I believe that they're trading at I think it's 24 times earnings. I have to check. I'm going to be checking fundamentals all day today. So I'm thinking between $170 to about $175. At that point, then you're waiting for the little tip that I just gave you, right? The 5 and the 21. So Amazon, I'll set an alert here. I'm going to set an alert on the EMA cross. I'm not really going to set an alert at the level. I'm not that interested in it trading at 174. I'm interested when the 5-day moving average starts to overcome some of the bigger moving averages. That's what I want to know about. Okay, let's see what else. That's basically it, guys. That's all I have. Today is not my day. Today is really not my day. I'm not particularly in a good mood. I've lost money today. Well, I have unrealized losses today, and yeah, I'm just not feeling it. I'm definitely not feeling the market. I don't think that this is the environment to buy more in, and I don't think that I want to chase the shorts. Usually when it gets like this, personally, I don't like chasing short positions. I like day trading. So off to the side here, right? On this other screen, this is where I'm generally looking for positions to, short or long. But overall, I'm going to be waiting. I'm going to be waiting on the sideline and just paying attention to what's coming in terms of data. Are there dark pool prints? Like, for example, I was just talking about this. Were there a lot of short dark pool prints? There was on the 2nd of April. So we had a little bit here. We had some block sentiment. But overall, it hasn't built up, right? And we had some long prints come in on just yesterday, right? These are several big trades. These are several huge trades. So that's on Qs. This is SPY as well. Let's see what we got. This kills me, man. Why were they going long yesterday? This freaking kills me. So this is going long. This is going long. Did we have a huge negative print yesterday? No, we didn't. We didn't have any negative prints. Actually, on the 31st of March, we had a huge positive print, right? So someone was concealing long orders there. I don't know who it is. That's the whole point of dark pool prints. And this is all the long orders that came in yesterday. They're fairly decently sized, right? They're fairly decently sized. And another thing that bothers me is that the VIX was being shorted yesterday. So I don't understand that. I really don't get that. There it is. Amazon was being longed yesterday, and the VIX was being shorted yesterday. So someone like me that likes to look at those larger orders doesn't really make sense to me. So I'm in the situation where I'm not that happy with price action, and there's a discrepancy with what the orders are being said. So are we buying or are we selling off because of commentary? I don't know. So that's why it's important to keep context for those larger time frames. Now, maybe one other stock that I am thinking about buying into, it's probably just one more recommendation that I'm going to give. I am interested in getting into Meta. So Meta is breaking below this threshold, right? We've broken below the trend right here. We've broken below it $50 ago. So if we trade back down to the $500 level or as low as 460, I'm interested in buying Meta. All right. Those are going to be all my recommendations and all my targets for you guys to watch. Probably the last thing that I'll mention is DIA. So DIA, I've always said that I generally make a lot of money on DIA, generally, but I'm very patient with it. So right now we have an H pattern looking like it will complete. The first target area is going to be 405. So 405 I would watch out for, but I think I'm more interested at $387 more than anything else. So if I can get that extreme level or that extreme pullback level that I just mentioned, then more than likely I'm going to be buying into DIA. So 405 and then possibly $387. All right. I apologize that today's just not my day. My temperament is off. Obviously today, I can't be too overly optimistic because when the market opens, I'm going to be down a pretty penny. But if y'all have any questions, let me know. We have recently opened up a new newsletter. So if you want information and breakdown that's a little bit more concise that you can read in 2 or 3 minutes, you can tag us on our bio, where you can get information on what we're doing, what we're trading, the day trades that we take, and just information and positions that we are looking at on a daily basis. Okay. So click the link in the bio. It's absolutely free. You don't have to pay anything. So if you are interested, just check that out. But aside from that, does anyone have any stocks that you would like me to go over or any opinion that you would like to ask me? It's perfectly fine if you do that now. Yeah, of course I can. So I'm looking at the 5 and the 21 cross. The reason why, it's because it's the short, it's a little bit of a very extreme short moving day average. So the extreme short traders, or short-term traders, I should say, those are going to be between your 5-day all the way up to your 9-day moving average. And the 13 and the 9, they're too close together. So I want to know on a 21-day basis, 21 days because you don't have 30 trading days in a month. But when you have your extreme short-term buyers or sellers, whatever, overcoming a little bit more of the medium moving average. Actually, I'll show this to you rather than use my fingers, but I'll explain exactly. When you look a little bit into statistics, when you see that the 5 is ever overcoming the 21, it gets, with a margin of error of about 5 to 7%, it gets almost the peaks and almost the bottoms of strong turns, so strong trend turns. So let me explain this here real quick. Let me remove the 2-day moving average. This is going to be a cool little trick that I'm going to teach everyone. This is the yellow is going to be the 5-day, and then the hot pink right here is going to be the 21-day moving average. So just check out where the bottoms are and check out where the peaks are. So it's not going to be accurate to a fault. Obviously, that's not going to be the case. But when you're looking at oversold or overbought environments, it generally is going to tell you, hey, the momentum has shifted. The momentum will shift when that 5-day moving average starts to just create overall a support level. So when that happens, I'm going to point this out. We're going to use SPY as my base. When that happens, generally you start getting somewhat of a trend, right? It doesn't have to be. You can use the 4, you can use the 13. That's okay. When I do my back testing and when I look at historical data, I'm generally looking at these points right here, and then I'm using Fibonacci retracements. So if I get a strong move to the upside, I do this a lot with my day trading. If I have a very strong move to the upside, I do a retracement to see exactly where buyers can settle in and then possibly see some continuation. The move yesterday that we caught long, I caught 2 longs recently with day trading to no fault because it basically got given up by the pullback here. I took that money and I bought shares, but it is what it is. So when you're looking at something like the 5 and the 21, right? This is just a little trick. This is a little trick that I learned almost 15 years ago. You're looking at generally the tides turning. You're saying, okay, we're losing some momentum here, or we're gaining some momentum. So these are usually, they're not going to be 100% accurate. There's no such thing as 100% accurate. There is no strategy out there that's going to absolutely nail the bottoms and the tops. It doesn't exist. It doesn't exist. But you can have a very, very good sense, extremely good sense of where a trend might start to turn or start to move in a particular direction. So I have found if you want to do, your own testing, it's fine if you say, no, you're an idiot, Sage. You have no idea what you're talking about. That's fine. That's okay if you think that. But this is what I generally find. If I plot it out on the chart and I'm saying, okay, if I buy into this point and if I sold at this point, I caught a good size of that move. This is already a strategy, right? This is literally a trading strategy, right? A lot of people do this. A lot of people usually are looking at the 200-day moving average. If it touches that, and if it holds some of the shorter term moving averages, that's when they generally buy in. That's a fun strategy. A lot of funds do that. Some of you think that a lot of the bigger funds are doing some complicated math. No, a lot of them don't even do that. So when you start seeing right here, it's starting to break lower, then you can have a little bit of a sense of where price action maybe start or stop moving in one direction or the other. So let's do this off the 4 hour, right? Let's do this off QQQ. This is a really good question. And let's include aftermarket data because that's going to be pertinent, right? I have a little bit more accuracy. I give up a lot of the move, right? Of course, I'm going to give up a lot of the move. But if you just look at where they cross, it gives you a fairly decent account of where the trend might be going for the next maybe month and a half, right? That's why I use the 5 and the 21. Hopefully, I did a good job in explaining that. Okay, does anyone have any other questions? Tesla and NVIDIA? Actually, I will bring up NVIDIA. I'm not that interested in NVIDIA right now. I would be interested in NVIDIA if we trade back down. This is a very good question as well. I have my incremental levels. I'm starting to get a little bit more excited because NVIDIA back down at 95 and then at $90, I think is fair value. Where I think that the absolute bottom of NVIDIA will be, absolute bottom. The valuation on NVIDIA is so good. It's so good. It's so good that I don't think that the market will let it get below $90 personally. I think that, we're very, very, very close to being at intrinsic value, right? I couldn't care less. I don't give a shit about any company that is not trading close to intrinsic value. And what I mean by intrinsic, we're using a PE ratio of anywhere between 15 to 25. So I'm not looking at EBITDA. I'm not looking at any of those terminologies aside from price to earnings and just looking at the balance sheet. If the balance sheet is healthy, I'm interested in buying into it. So NVIDIA has an extremely healthy balance sheet, extremely healthy. They're just not seeing the same growth as they saw in the last 2 to 3 years. So there's a curve, right? There's a curve that's slowing growth. That's going to happen. Every company goes through that phase. Every single company in history goes through that phase. So in terms of levels, if you're looking at that intrinsic value that we just talked about between 15 to 25, nothing's going to trade at exact intrinsic value. That doesn't exist. But about $90 to about $94 is where you have fair value. Anything lower than that, then you're trading at a discount, in my opinion. So that discount puts you at 75 to about $84. I don't think we get to 75. If we do, I'm probably going to put my entire portfolio in either Google, Amazon, or NVIDIA. One of the 3 stocks gets my entire portfolio. I will literally take all of it. And then I'm just going to sit on it for a little while. So really good question there on NVIDIA. Those are the only conditions, right? Stop paying attention so much to price. Price right now is going to be secondary to value of the company. So I know that some of us are looking at, just for example, Boeing, right? Do I want to be trading Boeing right now? I don't want to trade. I want to invest right now. Whenever the market pulls back like this, generally this is where I make the most amount of my money, right? For the last 10 years, when I bought Adobe at $73, right? A lot of people know this. I like to buy things when they are severely depressed. I bought Apple a long, long time ago as well. I bought some of these companies when I was first starting my business and when I was first looking to invest. I bought a lot of these things. I didn't buy many. I bought 4 stocks. That's it. I bought 4. And then from the 4, they grew so exponentially. I'm like, holy crap, I made all this money. And what did I do right? I doubled down on what I perceived there was value in. Okay. So that's what I want to do as well. On Apple, my opinion on Apple is about 190. And I would literally kill if we got back down to 170. The last time we traded at 170, I bought on Apple. I literally bought on Apple. Now check this out. Do you see where the 5 is overcoming the 21? So you're going to get a lot of this. You're going to get a lot of, some little false signals. It happens. It's just how do you smoothen this curve? Well, if you want to smoothen the curve, you're going to go to the 34-day moving average. So you want to do that? That's okay. We can do that. So that 34-day moving average is going to give you a little bit more of a smoothing effect. So you're going to give up some of the bottom and some of the top. I found that the 21 usually in my back testing statistically is a little bit more significant, but that's okay if you want to use the 34. There's nothing wrong with that, right? It's relevant to the 21. It's not that far off. So when I saw this, when I saw that we were overcoming here and then we had some volume that came in, I bought in an Apple at 172. I didn't catch the bottom, right? I'm generally not catching the bottom. It was 165. But at 172, I was like, yo, let's go. Let's do it. And that's what I did. That's exactly what I did. So when that happens, right, when I'm looking at that tide turning, I'm not interested in catching the exact bottom. I thought I was doing that yesterday, but obviously that's not the case. So I'm going to be waiting for that once again. So what am I going to be doing on Google and what am I going to be doing? I'm not that interested in Tesla. I'm sorry, guys, but I'm not. I don't like the valuation. I don't like anything about Tesla right now. I really don't. So what happens on Google off of the daily? So do you see that? When this starts turning into whatever that moving at, wherever it's pointing at, then from there, now I'm starting to change my opinion. I wouldn't recommend you use the 1 hour time frame. I wouldn't recommend you do that. The 4 hour time frame, that's what it needs to be. Because it tells you in a 21-day period, okay, now we're starting to move off a little bit of the negative sentiment. Cool? That's my tip for today. That is my one tip for today. Does anyone have any additional questions? Is everyone okay? Everyone good? All right. All right, awesome. AMD? Okay, let's look at AMD. I thought I had this on AMD. I really thought that I had this on AMD. Okay, I thought that my tide was turning on AMD at $99. I added to my position on AMD. I'm still holding on to it. I'm going to be, oh my God, I'm going to be an investor in AMD for a little while. I think that they might be trading lower, right? Because that 5 didn't overcome the 21. But when it did for the first time, I was looking at supply and demand levels. So when check this out, this is actually a really good example. This is a very, very good example. I got this example from a book, okay? It's a very famous book. It's a book on investing. It was written in 1987. And the guy became a millionaire in, I think, about 4 years of trading almost exactly this system, almost exactly. So he buys into shares positions. I believe he's still doing it now. Right? He's a lot older. I think he's in his 70s. But he would always say, if you're looking at demand levels and you're looking at the anchoring bias and you're using the moving averages that I'm teaching you right now, you look at AMD. AMD never overcame the 5-day moving, the 21-day moving average on the that's the daily time frame on the 4 hour. On the 4 hour, you overcame it, but you never persisted, right? You literally never persisted. So when you're looking at this, areas to possibly buy into would have been here. And then you would have been stopped out, right? You would have been stopped out at maybe a 10% loss here on shares, which is part of his system. He was like, if it hits 10%, I'm out, I'm gone. And then I'm looking to adjust. So he's always using that. So he's seeing, okay, am I buy a demand level off of the daily time frame or off of the weekly time frame? If I am, then I'll buy into the position. But if I'm not, this is actually the daily and I use the 4 hour. I don't use the daily, but the daily time frame usually is a little bit later to the party, but it gives you the overall sentiment of the trend, right? So here you had extremely accurate trend sentiment. If you are a positions trader is a little bit different than swinging. Position is for long periods of time. It's almost the same thing as an investing mindset. So if you're looking at just position swinging overall, you overcame here when you got above 105. Off of the 4 hour time frame, I got in earlier. I added to my position roughly at 101. But right now on AMD, I would wait for that 5 and that 21 to be crossed once again for you to have a better sense of if you're closer to a bottom or bottoming out than you are to possibly buying more. I wouldn't buy more AMD. I'm not in that camp right now. Cool. I'm definitely not in that camp. So that little trick that I just showed you, that trick is almost 35 years old. It's something that I use for my positions trading. And you don't have to believe me. Look at the chart and just see, make an educated guess on using the 4 hour, which is what I use. Use the 4 hour. If you find that the 1 hour works a little bit better for you, that's okay. If you want to smoothen the curve, I was using the 34, but I usually use the 21 because I want to catch the moves generally a little bit earlier. So I did. I definitely did. I added to my position on AMD. So if you want to use the 4-hour as your base, remember, you're not going to buy and sell on every little cross. That's ridiculous. You're going to use supply and demand as your home. That's the first thing about trading. You got to use supply and demand. But on some of these time frames, it really gives you a really good sense on if you buy into something. If you buy, like let's say I bought into Amazon. I bought in Amazon when it was at 85, right? I literally did this when we had this right here. Why do you think I bought in at 85? At 85 on the 4-hour time frame, we were starting to turn right here. Okay, let's see at the time on the 4-hour time frame, we were starting to turn. Now looking on the weekly, 85 was my entry, but it looks like $98 was where it was turning on the weekly. Obviously, not the same chart because we didn't have all this going on. But on the 4-hour, when that happened for me, I was like, okay, probably I want to buy into this. But why did I do that at that time? Right? This happened almost three and a half years ago. I bought in on Amazon at that time because we were starting to trade back down into a demand level. Does that make sense? This is a little bit more positions trading. I'm not that interested so much in the short-term targets because I have no idea what they're going to be. But for you guys to look to buy into shares and buy into positions, those stocks that I mentioned, NVIDIA, not AMD, NVIDIA, Amazon, Google, and the indexes. Those are the 4 things. That's pretty much it. Anything aside from that is secondary, right? If I'm looking maybe to buy into Meta is a little bit secondary as well because I think I can get a bargain on Meta if we trade back down to 460. We're not close to that. So if we're not close to it, it's not going to be part of my wheelhouse here. Cool? So that's what I have here for today, guys. I really appreciate you guys hanging on here. I've said it a few times. It's not really my day. It's not my day. It's just not my day. Yeah, I'm frustrated. I'm frustrated with commentary yesterday, but we don't trade blaming anyone else. We don't trade and saying, oh, so-and-so did this, so-and-so said that, screw the market, screw this person. That's not a healthy way of thinking about things, right? That's not how we need to trade. We need to trade valuation, we need to trade fundamentals, and we need to look at when things are falling in the market, that's not risky. If you're not in positions, if you're not holding on to it, and if you're cutting your positions when that 5 is overcoming the 21 because you've taken a position trade, let's just say you do that here on Meta. Let's just say you do that off the 4-hour time frame. Just for example, let's say you bought into Meta right here, and then that 5 was underpinning the 21 right here, right? This is the 3 EMA. Listen, let me change that. The 3 and the 5 EMA is basically going to be the same thing, but I'm going to give you an example. So if the 3 was overcoming the 21, you caught this nice little rally just using this one simple strategy. This is very, 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 very simple. Very, very simple, but it works quite well. It really, really does. So boom, you would have caught that. And where are you cutting this position? You're cutting almost at the top. And then maybe you want to take a short position there. So here, you never overcame that moving average. You probably would have bought into here. So on Meta, I'm going to be waiting for that 5 on the 21, wherever that is. I don't care where it is. It doesn't matter where it is. That's going to give me a better indication of where price can be more attractive for buyers or investors. So 500 is my level. I just said that a couple times. And then $460 is going to be my other target level. So Meta will be a consideration as well. Is everyone good? Is everyone okay? I'll get the book here right now. If you guys want to see it, I'll post it on Instagram. I'll make it a story. I have to get permission before I start sharing books because of we got to be careful with whoever's content we're looking to share. It's a very old book. I'm gonna get permission first, and then more than likely I'll post it on the stories. Okay. I got in trouble one time for mentioning someone else's content, and I just want to make sure that I have the right permission first. Okay. I hope you guys are trading safe. Even though I'm down, I'm trading safe. I really am. I'm not making any stupid recommendations. I'm truly not. I'm not telling you to buy into. I'm not telling you to buy into something stupidly ridiculous. I'm not telling you to, hey, put all your money in Uber and let's see how that goes. Or I'm not saying, hey, the risk reward on NEO right now is so good that you should be putting all your money in NEO. I'm not doing that. I'm not going to do that. I will tell you to put your money into companies that are still going to be the most important companies in the world, because that's where I'm at. Cool. All right. That's all I have, guys. Everyone enjoy your day. I have some trading and I have some fundamental analysis that I need to do. So thank you so much, guys. I appreciate it. And I'll see everyone next week. Okay. Take care.